Hi everyone, Stats Trader is here. And I've been off of YouTube for a long while. It's been almost 5 months, but now I'm back. I'm gonna share my thoughts about the current market conditions, and my thoughts about when the bear market is gonna be over. Also, I'm gonna share some thoughts about crypto market because crypto seems to be following the main market, and these two markets are very correlated. First, what's happening with the market right now? If you guys remember, the overall market took a nosedive in the beginning of this year, starting in January. So the war started in Ukraine. We have increasing inflation along with broken supply chain. All the goods, they cannot be delivered on time. Fuel prices are also going up. Overall, it's just a perfect storm for inflation. Me, myself, I didn't really trade for the last 4 months because there have not been many opportunities to go long or short. However, even in this market, you just have to be more picky. You have to really control your risk. Here we go, what works in this market. So as you know, the market is falling, and when the market is going up, like gap up short or overextended gap down. However, when the market is falling, the one strategy that has been working in 2019, 2020, and this is the strategy that I've made the most percentage gain on all of my accounts ever, that was the dip buy strategy. So this is just one strategy that works, and remember, there's 3 criteria for dip buy strategy. The first, if you want to dip buy a stock, you want to make sure it's a legitimate company. So it's not some kind of a low microfloat garbage that just dropping 70% on the warrant. Most likely it's not going to work because there's not enough people interested in buying this. Second thing is the volume has to be above 1 million. If you see a stock is dropping and the volume is below 1 million, the chances are the spreads are going to be crazy, so your execution is going to be really bad. Also, the stock is not going to be liquid. Number one, volume above 1 million. Number two, the drop has to be 30% or more. And I know there's a lot of people, a lot of traders in YouTube that whenever the stock drops 20%, they just buy it, or 22, 23%. The most important rule for me is this 30% rule. So I found a really clear edge that if a stock drops 30%, there is a high chance of the stock bouncing. Number three, this is the most critical one. This is basically where you either make money or you lose money. A stock has to halt. Halt is basically when a stock reaches a threshold for the percentage range it can go up or down within the 5-minute range. And if it halts on the way down, I don't know why, but most of the time they do bounce back. There's no halt. I don't even get into this stock. This was the biggest game changer for this dip buy strategy. So 30%, it has to drop 30%. It has to be a real company with float, I would say around like more than 10 million. It has to hold on the way down. It has to consistently trade more volume. So this strategy works, and we're gonna review a few examples. For other patterns like gap up short, overextended gap down, these patterns you can trade, but you really need to look at the outliers. The statistical outliers, this is what really works in this market, because there's not enough volume, and the overall percentage range that the stock can do, it's decreased. However, on the flip side, you have too many unpredictable moves. If you trade any short patterns, you can expect a stock to do 1 or 2 spikes. In this current market conditions, the stocks are pretty much unpredictable, but you can indeed trade these setups. However, all you need to do is you need to focus on the statistical outliers. So how do you do that? Well, first of all, you pick a short pattern that you have. Second, you gather all the data. So you know your average, how much it's going up, how much it's going down. And then you pick your outliers. What's the max percentage range that a stock can make on the way up and on the way down? And you trade based on that statistic. So for example, let's suppose you're trading parabolic shorts. So for example, a stock goes to 100% and you decide to short it. And then you look at your data and you notice that on average, these stocks, they go, let's say 70%, right? Shorted, let's say 50 or 60%, and your stop loss is at the max of your percentage range. So if, let's say for this particular parabolic short setup, your max high percentage was, let's say 140%. So Set your stop loss at 140% so that you know there's only 2 or 3% chance that your stock today is gonna go up to this point. Back to the main question, when will the bear market be over? Now the Federal Reserve is fighting inflation, and the way they fight inflation is they basically just spiking the interest rates. So as you guys know, whenever they spike interest rates, this is when the money become more and more expensive, and so there's less economic activity. That's the way they fight inflation. I was looking at the inflation reports for the past few months, and for now there is no clear sign of inflation slowing down. And the Fed is saying they'll keep increasing interest rates. Whenever the Fed is increasing interest rates, the market is falling down. The inflation is not slowing down. Why would we expect the market to reverse? So the first thing you want to look at is when the Fed stops increasing the interest rates. Now, also, you need to realize that picking individual stocks to buy and hold long, it's pretty much like trying to find a needle in a haystack, because the overall market is falling down, and all the stocks, with a very few exceptions, are also going down. And I know every day there's stocks that go 10 or 20% up, or 30, or even like 100%, but overall the market is falling down, and there's thousands and thousands of stocks. And what are the odds of your particular stock reversing and going against the market? You know that the odds of this happening are very, very slim. Not to buy long any stocks right now, and just look at the Feds, look at the interest rates, and listen to what they say, and that's when you'll know when the market is ready to reverse. So my thoughts about crypto: I don't trade crypto. I haven't traded crypto in like 5 years. I don't advise anyone to trade crypto. The tendency that I've noticed with crypto is that whenever the market is going up, the crypto is pretty much standing still, but when the market is crashing, the crypto is so the market is going down 1%, this crypto is crushing 10 or 15%. And there is no significant fundamental news in the crypto industry. Well, what crypto industry? There is no industry in crypto, so there is no news. It's all in decline, and most likely crypto will follow the overall market, and with the interest hikes, crypto will keep crushing. Thank you so much for watching this video. Ask me any questions in the comments below, and I'll see you guys next time.